Hey, this is Matt from InvestiQuant. Today is Wednesday, August 25, 2021. Yesterday was a quiet day in the markets. We put in 11 points of range and tested up and down just a little bit before coming right back to where we opened at yesterday, creating what is called a doji candlestick. That's where your open and your closing price are right in the same area. So we've got a doji up at what printed a new all-time high as well. So a doji at highs is the pattern that we have from yesterday. And this morning we are trading down just slightly. We're still within yesterday's range, but we're trading down just a couple points as of the time of this recording. So we're going to look at this pattern that has developed and see what it has led to historically when entering at the open as a long and exiting at the end of the session. So let me go ahead and finish getting this set up. I'm going to select the opening filter, gap down within the prior day range. That's where we are currently trading. And I'll tell you, it does matter for this pattern where the gap direction is. And right now, it's just a really small down gap. So if that was to change, you would want to go in here and look at this pattern with an up gap because the stats do change quite a bit when you do that. Next, I'm going to go into the price patterns library. I'm going to say that yesterday was a doji candlestick. So that comes from our candlestick category here. I'm going to hit equals next to day after a doji. And then I'm also going to say that it closed at a 50-day high. So I'm just going to hop over this next one to the right, the new high section, go down. I'm going to grab day after a 50-day high. You could use 5, 10. You could use any of these. They're all true for yesterday. You could scroll down and do a 52-week high, or you could grab them from the active today section. They're all available over here as well. And then lastly, I'm going to head over to the indicators section. I'm just going to put it above a 200-day simple moving average. Since I've got a 50-day high, I don't really need a 10-day here either. Now I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap down within the prior day range, and the prior day was a doji candlestick that closed at a 50-day high and above a 200-day simple moving average. Historically, we've got 36 samples here in the S&P to look at dating back to 2003. There's 38 in the NASDAQ, 31 in the Dow, 30 in the Russell. And win rates on them are skewing towards the upside. So S&P coming in at 64% of those 36 samples have closed higher on the session with this pattern. For the NASDAQ, it's 58%. For the Dow, 52%, and the Russell, strongest of the group, at 70%. So all four of those are neutral to favored. None of them are weak. And if we go to the average win and average loss, the average win has been larger than the average loss in the S&P. That is not the case for the others. So the NASDAQ has a larger average loss, as does the Dow. The Russell, very similar sized average wins and average losses. So the average moves are a little bit mixed here, historically speaking, but the win rates have been slightly favored as a whole when looking at this pattern. And again, it does matter where the opening location is, so you may want to drill down on your own once we get closer to the open to make sure that's where we are trading at the time of the open. If we were to gap up, these stats would not be as bullish as they are here. So hopefully you found that helpful. Good luck today, and we will see you next time.